Tax considerations when selling your home. Hi everyone, it's Ryan. Are you planning to sell your home? Well, before you do, there are some important tax considerations you should know about. In this video, we'll break down the key points in easy-to-understand language, so you can navigate the world of taxes confidently. Let's dive in. Ownership and use. To qualify for certain tax benefits, you must meet the ownership and use tests. Let's look at an example to understand this better. Suppose you bought a house 5 years ago, and have lived in it as your primary residence for at least 2 of those years. That means you meet the ownership and use requirements, making you eligible for potential tax exclusions. Normally, taxpayers who sell their main home for a capital gain may be able to exclude up to $250,000 of that gain from their income. Taxpayers who file a joint return with their spouse may be able to exclude up to $500,000. Homeowners excluding all the gain do not need to report the sale on their tax return unless a Form 1099-S was issued. Gains. If you sell your main home and make a profit, you may be able to exclude a portion of that gain from your taxable income. Let's consider an example. Imagine you purchased your home for $300,000, and after a few years, you decide to sell it for $500,000. This means you've made a capital gain of $200,000. As an individual taxpayer, you could potentially exclude up to $250,000 of the gain from your taxable income. In this scenario, you can exclude the entire $200,000 gain from your taxes, ensuring you keep more of your hard-earned money. Losses. Unfortunately, not all home sales result in gains. Sometimes you may sell your home for less than what you initially paid for it. Let's say you purchased a property for $400,000, but due to market conditions, you are only able to sell it for $350,000. In this case, you have experienced a loss of $50,000. It's important to note that losses on the sale of a personal residence are generally not tax-deductible. However, understanding the impact of such losses can help you make informed decisions. Multiple homes. If you own more than one home, it's important to note that you can only exclude the gain from the sale of your main home. Let's consider an example to illustrate this. Imagine you have a primary residence that you've lived in for the past 5 years and a vacation home that you've owned for the same period. If you decide to sell your primary residence and make a gain, you can potentially exclude a portion of that gain from your taxable income. However, if you sell your vacation home, the gain from that sale may be subject to taxes. Reporting the sale. If you don't qualify for the full exclusion of the gain, you must report the gain from the sale of your home on your tax return. Even if you don't owe any taxes on the gain, it's essential to fulfill your reporting obligations. Let's say you sell your home and make a gain of $300,000, but your eligibility allows for an exclusion of $250,000. In this case, you would need to report the remaining $50,000 gain on your tax return. Mortgage debt. When it comes to forgiven or canceled mortgage debt, it's generally considered taxable income. However, there are some exceptions to this rule. For instance, let's say you faced financial hardship, and as a result, a portion of your mortgage debt was forgiven by the lender. In some cases, you may be able to exclude this forgiven debt from your taxable income. It's crucial to consult a tax professional or refer to the specific guidelines to determine your eligibility for exclusion. Partial exclusion of gain. In some cases, even if you don't meet all the requirements for a full exclusion of gain, you may still qualify for a partial exclusion based on certain circumstances. Let's explore a few scenarios to understand this better. Work-related move. Let's say you've been offered a new job opportunity in a different city, and you need to relocate. If the new work location is at least 50 miles farther from your current home than your old work location, you may be eligible for a partial exclusion of gain. For example, if your old work location was 20 miles away from your home, and the new work location is 70 miles away, you meet the distance requirement. This means that even if you haven't met the ownership and use tests, you may still qualify for a partial exclusion based on the work-related move. Health-related move. Sometimes, health issues can necessitate a change in residence. If you or a family member requires medical treatment that is not readily available near your current home, you may be eligible for a partial exclusion of gain. For instance, let's say you have a family member with a severe medical condition, and moving to a different location would provide them with better access to medical care. In such cases, you may qualify for a partial exclusion based on the health-related move. Unforeseeable events. Certain unexpected events can also make you eligible for a partial exclusion of gain. For example, if your home is destroyed or condemned due to a natural disaster, you may be able to claim a partial exclusion. Similarly, major life changes such as death, divorce, or becoming eligible for unemployment compensation can also qualify you for a partial exclusion. Each of these events is considered unforeseeable and can have tax implications when selling your home. Conclusion. Selling a home involves important tax considerations, and understanding them can save you from unnecessary surprises. By meeting the ownership and use tests, considering gains and losses, reporting the sale accurately, being aware of mortgage debt implications, and exploring potential eligibility for partial exclusions, you can navigate the tax aspects of selling your home with confidence. Remember, the examples provided are for illustrative purposes only, and it's crucial to consult a tax professional for personalized advice based on your specific situation. They can help you navigate the complexities of tax laws and ensure you make informed decisions throughout the home selling process. Best of luck with your home sale, and may it be a smooth and financially beneficial transaction.